Good morning, all. As we wait for more people to join us, I just want to make sure we get the sound. If you can hear us, give us a note on your bottom right hand corner. Just type a comment so we know that you can receive us. Thank you. I will be taking my picture off the screen very shortly just to make sure it all works. We need to conserve bandwidth to be able to present you today. So okay, so with that said, I think we're about to get started. Most of you know me. I'm Harry Chirolambus. I have with me Patrick Nazar, who is our technical manager, and together we'll be presenting to you today. This presentation should take approximately 1 hour. We're not pressed for time, so we can go a bit over if we have to. It will be recorded, and will be available to members in the help section of the member site. We do have a few new users and guests, a lot of our members, so welcome to all of you. It's been a while since we ran the last webinar, and I have to apologize for that. It is our intention to run monthly webinars. I took a couple of months leave, and that was back in August, and took us a while to get going. I guess also we're doing a lot of work in preparation for next year's major upgrade, which we'll talk about soon. Just a couple of other housekeeping items again for those that just come on board. If you have a freeze or if you can't hear us, just refresh your browser, give it a number of goes, because if it goes offline, it just takes a bit of time to come back on. I think we've resolved most of the issues we had. Some months ago, we struggled with the technical aspect of the presentation, and we got a lot of cutoffs. Unfortunately, video recording was mostly lost. This time around, we do have a very good bandwidth, and it looks like the technical people have sorted all the issues. So I hope we're going to go without any glitches. Just before we get started, we need to acknowledge the disclaimers, and just to make sure that everyone understands that everything that we present today is general advice only. It does not take your personal details, and it should not be relied on to be as a personal financial advice. Again, warning that trading and investments have inherent risks, and that should not be taken without first obtaining professional advice of specific nature. We don't make any representation that what we show you today can achieve similar losses or profits as those illustrated. And again, we warn that past performance may not be a reliable indicator for any future performance. To see all our terms of use, visit our website on www.tradingedgedynamics.com.au. Having got that out of the way, I just want to briefly cover what I'm going to go through today. I am going to show you some shortcuts in using the platform for some of you that are fairly new. I will try to cover some areas that might help you get started and get a better use of the platform. For those of you who have been with us for most of this year, apologies for showing you some obvious things, but it's inevitable because you've got members at all levels. I hope that you're going to get a benefit in any case, and we do have some new things to show everybody. We will go through a lot of the editors charts and show you how the most latest version of them and why we've chosen them. We'll look at the performance of the select trades, which have been running now for about 9 months, since February this year. And we'll go through and explain some of the major upgrades we plan for 2018. We certainly want to get your feedback on any new features and developments, and we are certainly open to you, our customers, in terms of what might help you in what we're going to bring about in 2018. And we are talking about a major rewrite of the platform, and therefore we're starting up with a blank canvas. We will be carrying a lot of the benefits of the current platform, but it's necessary for us to upgrade in order to expand ongoing as a customer base expands, and also enhance what we do. Um, well, that's the overall. I I want to talk a little bit about the market, and but instead of having this boring screen in front of us, let's uh, let's start looking at some of the things we're going to cover. Uh, Let me just bring a slide first, and I will bear with me. Okay. We have done some modifications on the front page, and there's a lot more information in this panel on the top right hand corner that you see. We update this on a weekly basis, and here you can see when the last update has taken place in terms of editors charts, TA charts. We do put a bit of commentary about the market, and I want to talk about that briefly. I mean, the overall market has been very bullish, and over the last 2 months especially, we have a bit of a consolidation in the Australian market the last 3 weeks, but we've hit the all-time highs above 6,000. We've come just under, and we're testing that level of resistance. Eventually, that should become support as the market moves to the upside. I still get a lot of people, though, talking about trying to recover from long-term losses from stocks that plummeted and may or may not get back. Stocks like Telstra, VOC, TPM, and a lot of smaller caps like Slater Gordon, Arden Leisure, Vita Group, Capital Health, Select Harvest, and many, many more stocks that plummeted. So I guess what we try to do is and have exits so we don't get in a situation where we're holding big losses. And I know you all get bombarded with articles pushing market views for an uptrend or a downtrend or an imminent correction. If we try to make our trading and investment decisions based on that kind of unclear comments that come through every day, you find that you're chasing your tail and you're unlikely to succeed. Markets have a way of behaving totally opposite to what you may think may happen. Many examples such as the pre-election fears of Trump, North Korea fears, and maybe even the end of the mining boom fear. So I guess that stops many of us from being in the market, entering the market at the right time, and missing out on the bulk of the recovery of the gains that follow some of those small downsides. We try hard to avoid distractions and stay focused in making our decisions based on numbers and the technical indicators, and we act on what they're telling us. This means we can act on events with high probability, and because we know the technicals can change very quickly, we also protect ourselves from the downsides with a calculated stop losses. And that's the key to everyone's success in this market, is to have a clear plan of entry and exit for both gains and loss scenarios. That way you can place your conditional entries and exits and sleep well at night. If you're not using a conditional orders, and then you're not taking advantage of the best value entry and exits. You're probably spending a lot of hours watching the market, trying to execute manual orders. On the other hand, if you're buying and hold for long term without any exit points, you can I believe you only get the leftovers, and that's after the profit takers have taken their profits. So is your super fund or trading giving you returns in excess of 30% per annum? Someone might say, is that possible? You may be convinced that doing better than the market average is good enough. So you may be happy with 10% perhaps, or anything between 0 and 10%. And if I go down this list here, we can see the indices and what the markets has done. And I just highlight a few things here. So we have, bear with me. Okay, so we have the market performing ASX 200 over the last year at around about 10%. And I guess if you're doing around about that level or just above that, you're performing to the market. But there's a lot of sectors that do well in excess of 10%. So why should we be happy with just the market average when sector performance can be 20 to 25% in many cases? How much you want to get out of your investments will determine your strategy and also the risk you are prepared to take. Key factors that can affect your success or failure is your selection choices, the timing and execution. How much you're prepared to do or leave to others to do. If you have your managed super with in a fund, you may contribute to your success, but it's not about quantity, how much you do. It's all about the quality, and that's what we cover. There's a lot of articles in the help section and the learning center that you can read all about that have been accumulated over the past months. I see that Joe is not online as yet. Joe is supposed to join us. Joe spent quite some time as part of the team writing and helping us with some of those articles. Having shown you that, I'm going to actually jump into the performance phase and let's have a look where we are as an expectation before we actually go in and have a look at these key points. So, oops, bear with me. We published this summary in the editor's charts, and you can actually see all the trades. Every single trade is recorded. We've been doing this since 26th of February this year, and in total we have something like 86 trades so far. It's about 8 trades did not actually trigger, so we have actually active 76 trades that and they can be shown in here in terms of active trades and exited trades. I want to just explain about the performance. Just ignore that small number here of 4.6%. It's not actually a true indication. I'll explain what it means in a minute. But out of the trades that we have active currently, we have 22 trades, and that's probably the highest number of trades we had active. When we started, we had probably half a dozen trades. We've moved up to about a dozen and gradually increased to about 22 trades at any one time. So our exposure in the market, it's based on the example we show here of $10,000 per trade, is $220,000 currently, and our winning trades are 12 out of 22 with a percentage gain and a total profit of 14. These are still active trades, they haven't been closed, and the losing trades losing 6,000. A net result of the current live trades of $8,000. Similarly, the closed trades, 56 of them, compromise slightly less win ratio. The win ratio is not that good. I guess a couple of months I was away, didn't have as good success excuse me, and not having all the tools with me when I was away, but again we are doing a lot better now. I guess we're looking for at least 50% win-loss ratio, and we want to ensure that the winners gain us far more than the losers, and this is already the case here, where the 21 winners are gaining $60,000, 35 on the losers, a total net figure of 28. And a total return for our portfolio that we started back in 26 and we change every week is 36,000 in the positive. I guess annualized is 32%, and what that means is that we total investment over that period would have been $781,000. Again, we haven't invested that money out in one go, but that's the total investment in and out. at any one time we would have been holding anything between an average of about $150,000, but anything between 100 and 220,000. So another way of looking at those figures, if we've been holding an average of $160,000 worth of stocks, that's 16 stocks times 10,000 per stock for about 9 months. That gives us an average with a total return of $36,500. That gives us an average return of 22.8% divided by the 9 months of the year. Annualized, it's 30.4%, which is not far off here, just doing those rough figures. That's the exact figure, actually, if you take every single trade. This figure here represents the percentage of this number of the total investment is if we're holding that investment for the whole period. So that's not quite an accurate figure, but it's a figure that we need to have in our calculations. So that's our performance. We can certainly do a lot better than that. The whole secret of this is that we do the work, and I'll be covering that in the key points today. We scan the market, we update some 240 charts to make it easy for you to find the stocks that are relevant, the stocks that are moving. We group that's out of 6 categories. So we have 6 categories of 40 stocks per category that we update charts every week, and we'll go through that very shortly. And we actually highlight, to make it easy, we highlight the price growth potential by looking at the entry and exit points, by looking at the points of support and resistance, the trend lines, where these points offer the high probability trades, and we highlight this, which should help derive the exit and entry points for you. We do that specifically on the Edit or Select trades, but we mark in all the charts we do, or most of the charts we do, the support, resistance, and trend lines to make it easy, and it is that simple to follow. Okay, I'm going to jump from here to we're getting some comments. John, let me try and read your comment. Yes, it is, John. It is based on the Flex strategy. The testing that we have done, extensive testing that we've done on the 3 strategies, and let me just get the platform up so everyone can see the strategies, shows that the short-term strategy actually provides far better results, followed by the Flex, followed by the long-term strategy. The reason we promote the Flex strategy is because getting in and out of stocks might not be everybody's cup of tea. Some people would don't want to sit in front of the computer and trade daily. Some want to put their trades after hours and put the conditional entries and exits and let them execute themselves, which is probably the sensible, and that's the way we're running the portfolio. So the strategy can be changed from this menu here. As you can see, I'm running Flex. I can change at any time and see the results in my charts using the other 2 strategies. Any other comments? Please give us some text. We'll try and answer them. We've also had some questions put to us by email, and we'll try and answer those as well for our members. So again, let's look at some examples and get started, and we'll come back to the notes and presentation later. So if we John, I hope I've answered your question about the strategy. If there's any more, please let me know. If we go to ASX equities, and here we will see all the equities, 900, let me just grab my pen here, 900 assets, in total 1996 assets. That's every stock in the ASX, listed in the ASX, and every column here in this list is filterable and sortable, which makes it easy for us to get down to the numbers of stocks that we need. Now, I'll show you a couple of methods here, and we'll show you the shortcuts of how to do it. one of the easiest methods is to go to this column here, the second column, and rather than all, select the category that you want to bring forward. So if, for example, we want to have a look at the select active trades right now, we will highlight the category, the blue dot, and if I put my pointer on there, select trades active, that highlights that all these stocks, 22 of them, 22 out of 1900 have been selected. I can now select all these stocks because they're under 40. If they're more than 40, I can't select them. So that's one of the restrictions we got in the current platform. Now we'll be looking at in the future. And we can add them to a watch list. So I'm pretty sure my temp is free, so I can add them to an existing watch list called temp. And one stock already in there, 21 added. So if I go to watch list now, I just deselect those, and if I want to, before I get out, I can actually clear the filters, so when I get back I can see all 1900 stocks. So if I go to my watch list and go to temp, we should have, actually we do have 34. Well, I'm going to do this again. I'm going to select all and delete the stocks in the temp file and remove, and I'm going back in the ASX equities, and I am going to highlight again just my select trade active, and say select all and add to the temp category, and this time I'll get 22 stocks. Clear, deselect, and back to my temp. I hope I'm not going too fast for the refreshment of the screen. So I'm back into my temp category. I can actually change from this menu here, drop down menu, so I can actually close this, reduce that menu, and now I'm in here, I can actually access my other watch list from this menu here. So let's have a look at some of these stocks, and we can go anywhere here, and this is one of the new ones. View charts. And here you're actually looking at my chart, only because I create them. And if you want to look at the editor's charts, which in this case will be exactly the same as what you're looking. Now we're staying in editor's charts, and we actually have fixed the fixtures, so we can actually click from stock to stock and go to next in the list, or we can find the list here and click to the stock we want to have a look at. These are all the stocks. Now what this symbols means for our new users: E is for entry, S is for stop loss exit, and if we scroll down enough, go back down again, and we should be able to see the exit, which is right up here, the profit taking, which is just below the resistance level. And you may say, well, do you really expect that to go all the way up there? And well, we'll look at some of the examples we had before, and we see how we've been very successful in picking that up. And by looking at these trend lines and uptrend and downtrend, support and resistance, while I'm doing this, I am going to show you some of the, flick back to here and have a look at this revised editor's chart legend that we've updated since a few months ago, just to make sure we're all on the same page. We show resistance as a dotted red line. Most commonly that would be a horizontal line, and support in a blue line. The uptrend is showing in a different type of dotted, with a dot and dash line, for the blue for the uptrend, down for the downtrend. Any developing trends where the uptrends or downtrends are shown by dotted line, blue for support or uptrend, and red for downtrend or resistance. And we do show EMA bullish crossings with a circle. When the convergence of those EMAs show us an uptrend, we try to, especially on the charts that we do cover, we try to show them with a circle. So that's the legend we use, and I'm going to go back to the chart. So when you see those sort of things, that's the circle we're talking about, that's the uptrend, that's the support line, and right up there is the couple of resistance lines that we expect to go through. So just to show you how they all work and how they worked in the past, I can show you while I'm in the charts. I can now go to select trades not active, and that's our past trades. and we can certainly look here at any of these trades and see how they have performed. Here's a trade we've took back here on the 5th of March with the details given to us, entry, stop loss, and profit target. And we certainly hit that resistance line and then retrace back all the way back down. We had a second attempt at the same stock. This is APA Group, and in this particular time, that was in September, 17th of September, similar sort of entry and exit points. We didn't get it right this time though. We market went below the first support, actually did not cross the second support, but we had a stop loss a little bit too tight in this case, and the uptrend has now commenced, but we've missed out because we've triggered on a downtrend. We've triggered at the exit level of 818. The market went down right down to 806 or thereabouts. So didn't miss by much, but you know, it's the way it is. We only update the charts on a weekly basis. It is our plan down the track that we may look at daily updates and therefore have something that's we can adjust. For example, once we see this trend developing on the downside, we may exit the trade and amend the trade. We don't often do that unless we catch it up on a weekly reviews. It is a lot of work for us to maintain, and as we build a customer base, we're able to increase our work employees and therefore provide the service to you. It's just something we cannot do at this stage on a daily basis. But the success is still there regardless of what. Let's just flick through and have a look at some of these other trades, and I guess there's a AIB Corporation picked up back in 7th of May. One of the things we look for is also to pick a trade very early in the stages close to the support line. In this case, we picked it up fairly late. It was a fairly solid move. As you can see, after we picked it, we had this retracement. It's yellow because it triggered the downside in this case, so we were stopped out, and before the bullish run started back here, it's now gone beyond the resistance lines. That resistance line is now developing to be a new support line. That's why they're changing color at that level. So this is a trade actually we've missed out on. We've lost money on, not a lot of money. The benefit would have been much greater have we had the stop loss lower. It is what it is. I guess this select trades is to highlight examples of how we select stocks that have high potential for growth. We try to pick them up as close as possible to the support lines, so therefore our exit points are just below support. Maybe I should put just a drawing again just to show you what we no, I don't have one of those drawings handy with me, but what I can do is just very briefly, I'm going to switch to a whiteboard. Disconnected for very briefly, and you should be back with us. And if I share the whiteboard, is that the way we no? Share whiteboard. Can you see a whiteboard? Okay, so if we can see a whiteboard, so I should be able to show you. Bear with me. We'll put something on this whiteboard so you can see, and we'll put okay. All right, there we go. Okay, and again, to demonstrate what we look for, we look for the distance between support and resistance. We look for an entry. This is a descending triangle, and obviously we had a break to the upside, a breakout to the upside. You can get generally you get a retracement back to the trend line, and before you get your uptrend. This retracement doesn't always happen, and sometimes we expect and we put a buy here, the market shoots up and we miss it, and that's happened on 8 occasions in this case. I guess they are examples, and we don't get them 100%. If we monitor them daily, and certainly the work I do for myself, I can adjust my own trades on a daily basis, and that's exactly what you can do. You can look at what we suggest, you can make your own decisions. It's a guide, but it shows you that those guides we provide, and we document them and we show them to you, and we'll look at very shortly how we document that to you, not just on the chart but in the spreadsheet. And as you can see, the risk ratio of getting it wrong, if we had an exit point, probably in this case it could have been below support here or below this trend line, and the reward exit point up here just below the resistance. So we look for a much higher reward than risk. So we generally look for at least 2-to-1 ratio reward to risk before we take the trade. If we are picking the trade up here and we've got very little room to move, we don't consider that to be a risk worth taking. And by approaching it in this manner, you find that the number of losses you have only lose you a little bit of money. The rewards when you get it right are huge to cover more than a few trades, and that's how you stay ahead in this game. Okay, that was. Well, I'm going to get you back to the screen. I'm going to lose you for a second, and you should be able to rejoin. Okay, and we should have you back with us, and we are back on the chart screen. Joe, welcome. I did have mentioned you earlier about all the help in developing part of the site, and certainly all the menus on help and the tutorials, a lot of the articles we write. Joe has been the instigator behind a lot of those, a valuable member of the team. So if you have any questions, pop them to us. We'll try and pause every now and then to try and answer those questions. Right now, we are looking at some of the select trades, past select trades, not active. And as we scroll through to see, that was a lost trade. This is another winning trade. This is Bellamy's. We picked it up here after the downtrend. We're starting to get some uptrend developing, and certainly we picked it up a good time. We could have picked it down here, would have had a retracement and back up again. Again, a little bit late in this case, but nonetheless a good profitable trade, going all the way from 755 right up to 1195. And as you can see, we exit the trade. This resistance again behaves as it normally does, and again holds the trade. The trade bounces back down from that resistance. Occasionally we have this resistance tested and we go back up again. That to us is a new trade, and we prefer to take our money off the table at this level, re-enter when we have a new setup opportunity above that resistance line. At this moment it's still resistance, and it will not become support or turn to blue until we cross and confirm that crossing is above that line. Okay, I'm going to flick through a few more here. Again, a very good trade. Blackmore's very similar business as Bellamy's we saw before in the export to China trades. Had a big long downtrend, and we picked it right at the bottom. I guess when we picked it up at $109 or so, and we predicted the 160 plus mark, it wasn't by chance. We had this lines drawn. We've shown you this back on the 3rd of September, and we hit that within a matter of, we're talking about end of August here, so we're talking about September, October, November. So within 3 months, so 12 weeks with that sort of return. And we can actually cross over and look at where you get the actual trades. And if we go to this part of the menu, and very quickly have a look at the detail list, and we go through, let me just close some of this, and we go to TA Talk and Editors Select Trades. now click on the wrong one, TA charts. In here, you can actually see the active trades in this PDF file, and it is a bit small. You have to enlarge it, and these are the active trades. We show you the entry, we show you the stop loss, the profit target, the actual entry, the number of the price we entered it at, the actual units taken. These are the actual. This is a calculation to show us how many at that price, but how many units to take. We've taken the same number of units as suggested for $10,000 investment, and this is the number of days we've been holding those trades. The cost, the brokerage, the input capital, any dividends shown, and the gains and losses are shown here, both as a percentage and as a dollar term. Again, the important things here are, and I'll highlight them again on this chart, is the annualized percentage and the total return. And I repeat, that $36,500 is a return on an average holding of about $150,000, which is about 15 trades. We're currently holding 22. We increased that over the recent months, the number of holdings, but over the 9 months of since we've been running this, the average is about 150,000 holding at any time. So this is the trades that are currently active. You can certainly, and I'll close this, and you can certainly access also the trades. And let's go back to where we were. And you can actually access the TA charts for the full 86 or so trades, showing you both the gains and the losses. The ones in green are the ones that are, again, the same, exactly the same. It's just we don't want to be looking at some of these old trades. This period was not very good for us. We had a number of losses, but as you can see, the losses are generally held down. The wins are bigger than the losses, and the green ones are the ones, the active trades, the summary of which you can see on the other page I just showing you. So we just go back out of here, and if you want to actually see what goes in and out of the trades, we showed you the shortcut earlier how to actually get the categories, and I'm going to go back to those in a minute. But if you want to actually see what's moved in and out in this week under trend reversals, for example, these are the last weekend. We've added these 3 stocks here, and we've dropped these 3 stocks. This was the list of last week, the previous week. This is the list of this week. The highlighted blue figures are stocks that are also belong to the select trades taken from this list. And similar thing, if I go back this way, I can go back and look at the EMA crossings. And actually it's worth looking at the actual contents of the EMAs. They're very profitable trades, and even though we drop 3 or 4 every week, the new ones, these are the ones that we dropped, these are the ones we've added in, and this is the full list of the stocks, including select trades from that list. I guess the EMA crossings, the reason we don't get a lot of select trades in this list is because we pick up the trend before we pick up the EMA crossings. We pick up the reversal, I guess, before we pick up the actual crossing of the EMAs. But they seem to be trades that hold on and carry on, giving us continual growth. And we'll have a look at those charts very quickly. Before I do, I want to just look at the last category here. I'm going to go back and just have a look at the last category, which is the value opportunities, which are trades that come from Kalkine, a value partner. Kalkine Limited evaluate stocks on their merits for growth, and every week we publish 3 stocks. We sort them out into stocks that are currently bullish and currently bearish. This top list shows you the bullish stocks. The bottom list shows you the bearish stocks. We only publish in the categories the top list, but you can come in here, and if you want to create a watch list of those, you can actually copy and paste it as simple as that. Or the top list, you can actually copy and go into a watch list. We'll go to another temp category. I've got nothing in here, and you can import, as simple as that, paste and import and accept, and all of a sudden we've got those same entries we saw in that table in our watch list called TEM2. We can rename it here. We can do whatever, take stocks out, add stocks in. But another way, as I've shown before, is to do exactly the same thing looking at the categories here. As you'll notice, because this belongs to the bullish category for value opportunities, you will have that color dot throughout. So it would have been the same if you would have gone into ASX equities to get exactly the same list. From the ASX equities Explorer, we would, from the 1900 stocks, we will highlight just the bullish opportunities, for example, and that will give us exactly the same list with 37 stocks. We can then select all and add to watch list. I'm going to add it to the same watch list, so it's going to tell me that they're already there. So okay, clear that. The other list to watch, and I'm just going to clear this TEM2 because I want to use it for another example I'm going to do very shortly. So select all and delete. So my TEM2 is now empty. I'm going to do the same thing with TEMP1 and select all and delete and remove. Okay, so I've got both my temps are now empty. So it stops any confusion with doubling up. And now if we go to ASX equities and have a look at, let's say, one of these categories, and we'll have a look at the EMA crossings. And again, the EMA crossings is the red dot, which belongs to all those. The other dots show you that this particular stock belongs to a number of other categories. And if we can select the 40 stocks in this category and add to a watch list, and we'll add it to TEMP1. I think I must have more than one thing open because I'm getting duplication. So in any case, I'm going to go to TEMP1. I do have the same list here with EMA crossings. It's one of my lists, which is exactly the same. So I can go to either one of those. And let's have a look at some of these charts. Just to, actually I'm going to go back for some of our new users. I'm just going to highlight, I've gone too fast through that process. I'm going to highlight how I get to that. So I'm in EMA crossings, and I can do a number of things. I can click the chevron here and select from that one of the options I have to view the chart, to view the analysis, run a simulation, or remove from the watch list. So basically we just want to go to the charts. So we just go to the charts. It opens up a new tab for us, and we are in EMA crossings, and we have the top of the list. We can actually access subsequent stocks in this list by going next, backwards, or forwards. Because we're at the beginning, we can only go forward. We're looking at, I am looking at EMA crossings. So this is the time we actually put the stock out. Ignore the setup. That was something different. The EMA crossing would have come around about that time or sometime thereafter, this crossing here. And for as long as these numbers, EMA lines remain to the upside and diverging, we will continue to keep that stock in that list. This had a pretty good run from this point onwards. We don't measure the performance of this particular category, but it's something we intend to do down the future, to measure the performance of all the categories as that we put them in and out of those categories. So you can then see how well they're performing using that particular strategy. Here's another one. There's the convergence. We published that. We're very careful not to publish every single small one that happens in between, but when we have a nice big upturn, we may catch it 3 or 4 days after this, but nonetheless a nice good upside. On top of this divergence of the EMA lines, we also see that the resistance have been broken and now has been supporting the price action, and therefore it's become a support line. We move on to another one. Again, here we had a select trade, also an EMA crossing, with also a trend reversal with a trend changing directions. So again, you can see a lot of wonderful opportunities in the list that we published. We do all the work every week to select those stocks, we review them, we drop any ones that are no longer meet the guidelines, and we add generally 3 or 4 stocks per week to a list of 40. So anywhere between 5 and 10% of the stocks that we publish in each category may change from one week to the next. Obviously, if the market shows more volatility, we may see a lot more stocks dropping in or getting access. We limit the list to 40, so we cannot increase. But if we find that it's better examples, we will drop some of those stocks, even though they may still be profitable and still on the uptrend, in favor of new opportunities. So it's worth looking at that. So we've just looked at some of the shortcuts, how to create the list using both the Explorer, using the dot lines on the Explorer. I want to show you, again, a typical scan that I might do to find stocks. I just want to clear, I'm in Explorer, I want to clear all the previous filters. I can see the 996 assets, 1996. And in this particular case, I want to start with the sector, and I want to exclude, this is a sector for those that we haven't covered that before, the sector coding that we've introduced sometime this year. Let's say we know that the financials are not performing well. We know that the Royal Commission may affect that sector. We may want to be in there. We know that the telecommunications sector has not performed very well. So let's say we want to keep those 2 sectors out. So if we do that, all of a sudden we've got assets excluding those 2 sectors using that filter down to 1700. I like putting a liquidity filter, and I don't like to look at stocks that are smaller than around about 0.5, which is 500,000 of which is $500,000 traded daily. So having put that filter on here, and now see I'm down to 340 stocks. I may want to see the bullish alerts only for these stocks, and I want to sort them by duration to get an idea. I got 250, still too many. I sorted them out by clicking on the name that gives me a sorting preference from high to low, low to high, or no preference, and the filter is just on the right hand side here. Having got that, I actually want to put a filter in here, and in here I want to say I want to have anything that's changed alerts in the last 10 days. So we want to see a number that is less than or equal to 10. So having put that filter in here, our list is now down to 25, a manageable list to look at, and I can scroll down, I can see all the stocks, and if I want to select them and put them into a, not quite sure, I'm just going to go to the previous tab and have a look at my watch list without disturbing this. I'll come back to this. So if I go into my temp, I do have some stocks in temp. If I have any in temp 2, temp 2 is empty, so we'll go to temp 2. So we have select all, and we alt them to temp 2, and we'll create a watch list so we can actually have a look at these charts. We can clear the filters, deselect all, and actually close that. This is our temp 2. I'm just going to refresh because obviously this tab has been open, so I want to make sure I capture the temp 2 additions, and there they are. And now I can just right click or click the chevron and view the chart. Once I'm in the chart page, then I can change and look at all the stocks within that. And here's again the first stock that came up in this scan that we did is AGL. It's a stock that obviously we have it belongs to one of our sectors, one of our categories. It could be also an editor's chart. My screen actually shows editor's charts. Your screen will not be showing them unless you click on your chart page, which is here. Okay, so there's no editor's charts. This is obviously an update I've done to mine. hasn't been updated into 80s charts yet. So if I go back to my chart, okay, so it's got a downline, it's got a descending triangle with a breakout to the upside. We actually have this is actually a very good stock, and you may very well see this in this week's stocks selection. I guess if I look at the stock right back, I can see that that's the highest point. At this point in time, that would be, and I'm going to draw a line here to show everyone that that would be the resistance, and I'm going to set this line to be red, thickness of 2, and dotted line, apply and save. So let's make it a little bit longer. And what we're looking at here is support resistance. We have a stock that's breaking after retesting the trend line, the downside. We're on the upside. We just got an alert also on the bullish side, which is an indication that we've broken past the delta zone. And on that point, I'm going to answer a question. How are we going for time? We're actually running out of time. So I'm going to move on and say there's a scan, and there's stocks within the scan, many stocks that you can see with information, support resistance in many cases, not in all. Some of them are fairly new, some of them are fairly old. We haven't looked at this particular one for some time. This one is something I would ignore. It's up and down, so this breakout I would ignore, but certainly I'll be looking at something like this, which has a downside support line and an opportunity to get back up again. That gives us the best probability and the highest gain to loss ratio if we are to go the wrong way and break support. So that's the key points of what we look for to publish in our charts, and we try to make the work easier for you. Now, I'm just going to go back to our presentation notes and see what else can we do. I want to answer some questions because we've lost a fair bit of time. First, I will answer a couple of questions we had from email from our members. Lynn and Kim ask if I could explain more about the use of the delta zones and the pivot points and how can they use that in their trading. So to do that, I am going to go back to a chart, and I'm going to log out as mine because I want to show you what you're seeing. So I want to log out as a user here, and I want to log out as probably a support, accept and sign in. So I've come in as support, still flex strategy, and let's have a look at some of these. So if I go to anything in here, anything will do. I'll pick up the top on the list and just see what we get. Okay, so this is one of your charts without my support resistance lines, and what you're seeing here, you're seeing the delta zone in the dark blue line. You're seeing the pivot point in the red line, and just ignore the fast DMA for now. These are dynamic moving averages. They're not EMAs. They are something that we've used fractals and looks at previous movement of the price action to establish how quickly can we vary the moving average line, and therefore it becomes a far more reactive, especially when we look at shorter periods. So we use DMA a lot in our algorithms to determine that the technical indicators is one of the criteria we use. But again, to answer this question, there's many ways you can look at the interaction of those lines. You can actually switch them off by clicking on this to here, and you actually get the free chart. You can actually even switch the delete all drawings, and you can end up with a chart something like this. But if I want to put all that back on, if I put the DMA under indicators here, you can actually put the DMA pivot points, and we'll actually put the DMA delta zone, and we'll close these particular indicators things, and we're back to where we started. If I refresh, it should give me my lines as well. Okay, we've got everything. My alert as well. So what we're looking for here is two things. We're looking first for the long type trends, we're looking for the intersection of the just ignore the light blue, the red and the dark blue. So if the pivot point is above the delta zone, that's a very bullish trend. As you can see in this area, we have the pivot point is above the delta zone, and it becomes very bearish when we cross over and we're bearish zone, and we start becoming bullish again up here when we cross over, the red crosses over the dark blue. So one way to use is a very simplistic way is to look at, if you're looking at long term, is to look at the crossover of the red and the dark blue lines, and in the interrelationship between those. When the red is above, the dark blue is positive. When it's below, it's negative. Because we are, I just changed the strategies to show you what it looks like in different strategies. In the long-term strategy, again, the intersection is here. As you can see, we've given a fair bit of drawback until this point, until you actually exit, if you use that as your exit point. Another method we use, and we use that, and there's your long-term alert, and there's your interaction. So it happens around about that level. Not exactly on the point, but it happens around about that level. It's a lot of other factors we use to make the decision. So if I go to short-term, for example, for short-term trading, as you can see, before that interaction takes place down here, it's too late. We use other means, and one of them, you might actually look at the actual price action dropping below either of those lines. And while it's above those lines, it's very bullish. When the price action starts dropping below those lines, then there's some short-term trend. And that's why when you're looking at a short term, you'll be adding in and out, and that may not suit you. If I go back to Flex now, and the Flex has obviously these points are very different because you use different settings for these parameters, for these dynamic moving averages. But again, we're looking at the price action in this case crossing below the DMA line. And one of the most simplest way of using it, if you're using Flex, is to purely look at your price action and ensure that you're above the dynamic moving average, the blue line, which is showing you here. So currently we're above that line. As you can see, we never breached it. It's still bullish, and the bullish sign occurred back here, the bearish sign up here. So it's a very good way of reading what these alerts are telling you, but they vary depending on the strategy you're in. They vary whether we're looking at crossovers of the difference between pivot and delta, or the price action itself and the pivot and the delta. I hope that answers your question, Lynn and Kim. Jeff asked me if I can compare, if I do compare some of the wonderful examples from other platforms like Metastock, PhD Trainers, and others. I guess many platforms claim that their scans find wonderful gains in stocks after the event. We all can be wiser after the event. I can't really comment about many other platforms. All I can say is that I wasn't happy looking at many other platforms. I wasn't happy with what I was given because they all boast about the gains. They don't own up to the losses, and some do. To be fair, some do. But it's very easy to sell the things that have moved up. If you pick up 100 different stocks, and it's very easy to go and select and pick 2 or 3 of those and say how wonderful they are. But the other 50 or so may not have performed as well. Well, in contrast, Jeff, all I can say is that we show all our charts. We show, and it's there to see the ones we get right, the ones we get wrong. We show the performance through our spreadsheets, and therefore it's very clear about the direction we take. The idea is to, I guess, highlight, be upfront, and show everybody exactly where we are so you can all follow us. I remember of another platform that claimed gains of 18% plus on average for a long time, for over 20 years. And I spent a lot of time trying to analyze and prove or disprove if that was correct. and wasted a lot of time really. And so I don't like comparing other platforms. I like to stick to our own platform and our performance. But I just want to show you an example of how easy it is to manipulate figures. If you have a good year 20 years ago, and you can actually have a 200-300% gain, and you only need a very small gain thereafter to maintain your averages. So if you divide, for example, 300% gain that you could have in a particular year, going back when things were really booming, then divide that by 20, you're actually adding 15. You could be adding 15% to your average 20-year performance. So if, for example, you had 19 following years of just 5% performance per year, so 19 times 5 gives you 95, and you add that to, let's say, a 300 performance, so you got 395 divided by 20 years, you'll be showing an average of 19.7%. Well, that doesn't do anything for me if I've been trying to make money for 19 years. If someone had a good year some 20 years ago, so I'm very skeptical, and I spend a lot of time analyzing this. That's why I developed my own platform, because I don't trust what other people do, and there is genuine people out there, and there's good platforms, and I don't mean to knock everybody, but I just want to alert you that you should question the performance of everything you're shown, and you should ensure that the examples that you're given are transparent, and you can see the 6 months, 1 year, 5 year, whatever performance. We've been in business for only 1 year. That's all we can show you. It's all there for you to see. So, Jeff, thank you for raising those things. You also raised a few other points, but we're running out of time. Is there anything else that you guys want to raise today? Just very briefly, let me look at the comments. I want to finish off by, and we are right out of time, so I want to finish off by taking you to very briefly what we've done in 2017. We've completed editors charts, select traits. We've completed the categories and the filters we've shown you today. The industry classifications, we did that a few months ago. We've started the webinar recordings and video tutorials after some technical issues we had early in the piece. We have not done the portfolio manager. I wanted to spend a bit of time to talk to you about that today. We are running out of time. We will be including that in the major upgrade in 2018. I want to show you what other things we do, and I do want to leave you with some thoughts about giving us feedback about how else we can help you. We have some plans, and maybe I can just swing something like this to show you. Okay, on the screen is just some of the board that all our ideas we're investigating and doing a lot of work, from user experience, from features. Features are paid versus features that are going to be free. Certain major concepts and what is absolute requirements, and many other administration things that we need to build into the platform. Again, a lot of what you see will be carried over, but there will be a lot of new features, and with the new architecture that we're building the platform on, you'll be able to support a lot more things that we can't do right now. So again, this was just going to close that for a second and go back to wrong one. Go back to what we're looking at, and I guess we want to include a portfolio manager. We may offer that in different levels, so therefore it doesn't impact on our cost too much. So therefore, people that want the full bells and whistles of all the reports can access that, and people that want a very simplistic portfolio manager can get that as part of the deal without paying any extra. So we are looking at new and enhanced market scans. We're looking at new and enhanced strategy settings, and we are looking for comments about anything else that can help you analyze the market quicker and help you become a better trader or investor. So please give us your comment both on the website. You can write simple comments in your conversation, the text box on the bottom right-hand corner, or you can send us emails with more in-depth comments if you like. I apologize for going over time and not being able to take a lot more. If you got any quick questions, I will be happy to comment. But given now we've come to the end, I want to thank you. I want to ask you to help us promote our platform with all your friends and people in trading. Please send them a link to our website. Help us promote. We will be coming up with new innovative ideas to reward you guys as well for helping us to grow. But we are 1 year young, and we want to grow far more than we have. We had a good start, and we expect a lot more in 2018. Thank you very much. All the best for Christmas to you and your families. Have a safe and happy festive season, and thank you again.